Today's Monday, February 26th. This is the chart that we're playing on. We will be using the peak strategy still, but we're going to apply a different risk management to it. And I'll show you guys how that works. I'm just going to say there's going to be about 3 lines. Just say that we're here. Let's say we have a price that's here. If we were to go up, get a new peak and come back down, I would add another position. But if, say, I was long here and it broke past, each time it breaks past to a new level. So it would break, if I was here and it broke down here, I would double. And if it came back and broke down again, then I would double that. So each time it makes a new peak. And then obviously if it came back up here, I would exit. So whatever the previous peak is, the opposite peak is what I would exit. I'll show you what that looks like. Let's get started rolling and open, and you can see it in action. Okay, we have one right here. See that pulls up a little bit. Sideways is good too. Perfect. We have 2 peaks. Now we have something to play. So now I can't enter until it comes up here. I can enter a short, or it comes down here and I can enter a buy. That's pretty close. That's 1 candle here. I'm going to enter a short. Where do I sell? When I get down to here, within 1 candle worth. So it's like right there. If it comes up and taps it again, you don't have to enter a second. You can. Depends on how much you want to risk and earn. But I'm just going to enter another one here just to show you. This would be the new peak. Right, so that whole time goes up, down, up. That's peak, that's peak. And I'm going to move this up. There we go. So now if we get close to here, we see basically 1 candle here. This would be our new point of our exit. There you go. I would enter. I would not double. You only double when there's another peak above here. If there is nothing above there, you just let it run. There we go. That's our exit point. Basically, we have that. This peak doesn't really matter, right? Because if it kept moving down, it's the same exact thing. So, like that, that's peak. Get rid of some of the stuff here. And there's a line here, which is almost essentially this peak, right? So we have that and this. The next big peak is down here. So really what we're looking for is down here. All right, that pulled back. What does that mean? That means we can now enter here if it comes back down. And there it is. If it breaks through, you just let it run until it hits the next peak. Okay, this is the next peak. Does that mean this is gone now? These are essentially the same peak here. I'm just gonna move this line down. If it comes down, I can add. If it comes up, I can sell. I'm gonna look to exit here. It's already almost 2 o'clock. I'm just gonna exit that. Will it run to the next day? We'll play about 3 days in a row. for this strategy, you can actually use both the strategies at the same time. Basically, the strategy is best for rejections, and the peaks when we normally play is for breakouts. And so if it fails a breakout, you can just use this strategy, and if you're in this strategy and it breaks out, you just exit and then start the breakout strategy. Okay, we're almost there. It's a lot of peaks and lines here. We're not going to pay attention to any of that. As we saw, as each new peak gets created, that has higher priority than the previous peaks, unless there is no existing peak. This risk management strategy is a lot smaller in terms of size, and so it's a lot easier to mentally manage. A straight drop there. Again, it doesn't affect us at all because we're not in any positions. Potential up peak right here. We're just going to start that ahead. Let's see if it goes sideways or up. There you go, it goes up, that's our peak. If it comes back down, we get another peak. There we go, fantastic. It's not confirmed yet. There it is, now it's confirmed. And we're gonna sell. This is not a peak, this is the same exact peak, it just extended. So I'm gonna redraw that for you here. So we don't have an exit point except for right here. This is our exit point unless it comes down. So what it's gonna do is gonna come down, up, and make a peak, and then we can exit. Right now there is no exit, even if it goes that direction. I wanted to go down a little bit lower. Okay, there you go. Here, I can just add another position because the peak has been established. So we can go down here and exit. If it penetrates through, well, we've already exited. If it goes up, we'll have to wait for another pullback. So let's say if it kept going up like this, it would come down like this. And then if it hits this again, we would double and then exit here. There you go, I exit here. I'm within the candle. So even if right here I would have been able to exit, you just have to reach that one candle that touches the line. And obviously the bigger the rejection candle, the better. I'm going to enter here. It keeps tapping that line. Move this down. Move this down again. Exit points up here. It's one candle worth. Right here, this red one right there. You can go even closer. It's all up to you. It's very, very small risk. Oh, tapped. You can buy again. Really want to hit this line because then guess what? I get a double. Okay, oh, almost there. There we go. Down here, up here, down here. This is our exit point up here. I'm just gonna zoom in over here so we don't pay attention to all those lines. We need this to bounce up or to be another line. I would keep an eye out for the 4 o'clock here, or the 12 o'clock. I mean the 2 o'clock at 14. Let's just keep pulling down. We don't do anything here until it establishes the peak. Like so. We got a peak, and we want this to come a little bit down further. Erase this. Very nice. We're getting pretty close to 14. We're trying to aim for this peak here within one candle worth. So I'm going to right there. And there it is. Exit. And we're very close here, so I'm just going to let it run for the rest of the day. We'll do one more day here. This strategy gets you about 200 to 300 per day, depending on what you want to use in terms of your risk, how many positions you want to play. This is just one. You're only doing one position at a time. You can do 2 or 3 or 4. Let's see if we get a trending day. A trending day would be more difficult for the strategy because then there's no peaks that are made. But we'll play one just to see what that looks like. If we get one here, I don't know. Usually the trend happens pretty big at the very beginning, and at that point there's no peaks for us to really be entering into. Here we go. Okay, zoom in. All right, 2 peaks off the start. All right, we come down here, I'm gonna buy it. And that line just keeps getting moved down. I exit around up here in 1 candle worth. That one's a pretty close one there. One more candle I could have exited. Oh, there we go. I'm gonna exit that, and when I exit, I'm not gonna go back. I'm not gonna enter position unless it comes down and comes back up again. So we have this. That's kind of pointless there. That's kind of pointless because they're pretty much the same. So really, we only have 2 peaks. That's not a peak yet until it comes down. I need to come down and then come back up, and then I can enter. I need to pull down more. Otherwise, it's just one continuous up movement. That's pretty good. It matched back down to here. I do want it to pull down a little bit further, confirm this peak. There we go. Now if it comes up, we can enter. It's still going. Premature peak there. Let's see where that settles. Very nice. Got a peak there, and a peak here. Very small range there. Gonna buy here. Very nice. Already got our exit. Okay, let's keep going. We can keep going. exit that. Connect these. I'm gonna pull this line down. And this doesn't really have a line yet because it hasn't pulled back. That's our target up there. There you go. You pull down one more time. Perfect. Okay, so if it comes back up, I can enter a short. We're not going to enter here. We're almost at the 2 o'clock. We would have been able to exit, but that was too risky there. All right, so let's just end the day. That's 3 days worth. Let's just see what we get with our win rate. 100% win rate. So it's a smaller. I mean, we could have played more positions. Very small risk, very laid back. You don't really have to watch the entire day. It's a lot slower moving, slower. It's a small risk, high win rate here.